Hi, my name is Lukas Linnig. Many of you will know me. I'm the CFO of BRAIN Biotech AG. And today I'm here to tell you about a project which has truly transformational potential for brain. You've heard the presentations from Michael and Paul already, and you might be wondering now, great technology, exciting, but how do you want to make money with that? And I'm here to tell you today what we think and what our thought process is of how we might make money with the technology. You might also be wondering why you're seeing me and not Arian here today. When Aaron and I sat together some time ago, when it was clear that this project has such large potential for brain, we sat together and discussed our priorities. And as Arian has vast experience in the field of enzymes, we decided that he would be the one focusing mainly on the bioindustrial segment, whilst I would be focusing much more on the CRISPR, on our BEC topic. And as per today, I'm spending roughly 50% of my time only with this project, thinking and discussing with partners how to commercialize the technology. For today, I have 3 goals. First, I want to guide you through our thought process on how we intend to make money with the technology. Second, I want to update you on where we are and what our next steps are in terms of commercialization, but also in terms of organizational change. And last but not least, I want to excite you. I want to excite you as much as I'm excited. Let me tell you, this project is the most exciting thing I've been working on in my whole life. And this is particularly true because this project has such massive economic and ecological transformational potential. But without further ado, let me jump into my presentation. When I started this project, I thought about how do we commercialize this? This is a platform technology. So I started off with talking to a lot of people. A lot of different people that either knew more than me or had an interest in using a genome editing tool, or that were just interesting multipliers to talk to involve and to discuss with. And from all these discussions, I gained a lot. I gained new ideas on projects, new ways to commercialize the technology, new partners, just a lot of new stuff all the time. And many of these things are very interesting, and we are still in negotiation phases or discussing with partners how to make business out of it. But after some time, and when reflecting on the progress, I felt that we also needed a little bit more structure. As an approach next to the opportunistic play, we also needed a more structural approach to look at this field. And with that, we wanted to create a dualism that we could, on the one hand, have opportunistic discussions with potential partners, whilst on the other hand, we would also follow a clear process on how to commercialize the technology. And we have defined 5 questions, and we have put them in 2 categories. First category, where to play. Second category, how to win. And our 5 questions are relatively simple. Which part of the brain value chain should brain be focusing on? What are the use cases that we can address? What are the strategic considerations along the value chain? Which use cases shall we prioritize? And what are other budget, timing, and generally other constraints that we need to take into account? And all of these things we looked at and we are looking at in the light to maximize our stakeholder value. And in my today's presentation, I will guide you through these 5 questions and try to shed a little bit more light on how we are thinking about these things. So let's jump right into it. We're starting with the value chain. And this is actually not as easy as you might think. When we started thinking about entering this market, or when we saw that we had a technology and thought about how do we commercialize that on top of our own use, it was not really clear where to go. And so we decided that we would look at a lot of different companies. And what we did a market study, looked at well over 100 companies, and some of the outputs you've seen in the presentation from Michael earlier already. And we have identified what their business models are and where they play along the value chain. And we have identified 6 important steps in the value chain, which are often a little bit fuzzy, but there are some clear distinctions. And I want to guide you through these categories and let you know where we intend to play. And we are playing today already. Starting at the top level IP holder. This category refers to players which have their own independent IP. Independent in this case refers to IP which is not dependent on other technologies. Or to put it differently, independent technology has freedom to operate and is not dependent on other technologies or IP. This is the first category. And up to date, there's not too many players out there that have independent IP. We, however, are really pleased that we are expecting to have FTO, freedom to operate, which would also put us into that category of a top-level IP holder having own independent IP. The next category is R&D genome editing technology. This might sound a little artificial, but what we mean with that is producers or companies that invent dependent IP, often also known as application IP. You have the base technology, but having the base technology doesn't mean that you can use it in all organisms. So what we do and what others do is they come up with application IP. And this application IP is then used to make the original technology active in specific organisms. And there's important strategic considerations to be considered here. First, if others file dependent IP based on our technology, they might potentially limit us in using our own technology in the fields that they filed application IP on. However, on the other hand, additional application IP also increases the usability of the technology because it makes it easier to use in more applicable and more fields. So our strategy here is pretty simple. First, we put a lot of effort and resources on filing our own dependent IP to increase the broadness of the technology. This is especially true for organisms that we at BRAIN work a lot with in White Biotech. And some of these organisms you've heard about today from Michael and Paul. The other strategy we are pursuing is to work with partners, to work on co-developments that enable us to increase our IP position whilst making sure we are not getting blocked and the penetration of our technology is enabled by more application IP. The next category are the genome editing service providers. Pretty simple, these are companies that do genome editing on demand. And this is what you can also see in our business model, which we call We CRISPR for You. So we're obviously playing a role in that category as well. The next category are the adjacent service providers. And you can think of them as, for example, companies that provide consumables to apply CRISPR. One example here is the providing of kits or reagents to do the experiments in the lab, which many companies buy to not have to do everything in-house. And then there's 2 categories. One is called CRISPR-enabled products and CRISPR-included products. And even though sometimes the differentiation is difficult, there is an important difference to be considered. CRISPR-enabled products are products which have been created using CRISPR. CRISPR-included products include CRISPR in the final product. 2 examples, a CRISPR-enabled product could be a host strain. A host strain, for example, Aspergillus, that has been mentioned before, which is one important host strain which we use to produce enzymes. An example for a CRISPR-included product could be a treatment for example, a somatic treatment for curing leukemia using CRISPR. And the differentiation here is important because it has a different hurdle to get these products to the market. And what we are focusing on at this point, in the first place, is using CRISPR to enable to create new products. So where we are today is rather building up CRISPR-enabled products. If we look overall where we stand, we see ourselves well positioned and hopefully soon with granted IP as a top-level IP holder. We also see ourselves strong in the field of R&D genome editing technology, EI creating dependent IP. We see ourselves as a provider of genome editing service, and we are having started first developments ourselves using CRISPR, but we are looking at more projects to conduct in the future. Overall, we see that we are well positioned with our technology in terms of freedom to operate, costs, efficacy, and also our different mode of action. After having looked at the value chain, let's have a quick look at the market, or more specifically, the use cases which we can address. And what you see here, and by the way, this is a chart you've seen from Michael earlier already, are different markets, different use cases which we could look at. And what we have done, we have assessed our technology for the different markets and the different needs in the market, how well suited our technology is, and how applicable it is in the end, because the applicability in the end creates a use case and a USP which we can sell to commercialize the technology. So now we have looked at the value chain and we have looked at use cases. So we decided where to play. Now the game is how to win. This is the big question. And we have run several analyses to look at this question. And one of these analyses I want to show you today. We have done a matrix ranking endogenous and exogenous factors on a graph to look at how well the technology works and what potential business models for us could be. There's important categories. Looking at endogenous factors first, there's the BC product fit. A very important category. I referred back to how well is the technology suited for specific applications. This is where this comes into play. In this category, we look at how well does the technology work in a specific application or market, and how much competitive edge, how much USP can we provide. The next question, looking at endogenous factors, is also really important. How good is the fit with our strategy and capabilities? And this is particularly important because I talked about the vast opportunities that we have. And out there's a lot of rabbit holes. And we need to make sure we are digging in the right rabbit holes. And to decide what we are going to look at, we need to base that on our strength. We need to base that on what we are good at. And in order to do that, we, for example, also decided that some things we would probably not do in-house, but which we would do with partners. Looking at things like optimized algae, optimized plants, these kinds of things we are not professionals in. This is not our core expertise. So we would rather be focusing on what we are really good at. The exogenous factors are also really important, though they're a little bit different because we can't influence them that much. Some of these are market opportunity, the competition intensity, the time to market, the customer unmet need, but also, and not to be forgotten, the investment required. As you all know, we are to some extent also limited in terms of what we can invest, and the money we invest, we need to invest wisely. But before we jump into the graph, and I know that you're probably all excited already, let's look at our options. What can we actually do? And we have tried to form a couple of categories of ways we could commercialize the technology. And on the one hand, we have doing it all ourselves, doing it in-house. That could mean doing it with our current business. That could mean acquiring a company to do something. That could also mean signing up for partnerships. And in all these scenarios, we of course have the highest economic potential, which sounds great. On the other hand, we also have the highest risk. And not to be forgotten, we also have a big risk of not being focused. And not being focused is, from my point of view, one very, very dangerous thing which we should at all costs avoid. So let's look at the other extreme. License out. I mean, the CFO heart inside me is of course joyful when I hear we just give away the technology and then we wait and then we get royalties at some point. This sounds great, right? No cost for us, perfect. However, and this is something that is also important, we need to look at it to maximize our stakeholder value, and in this case, particularly the shareholder value. So what we need to be looking at is how ready is the technology in different fields. And in some fields, we are pretty well advanced. Looking at fields like fungi, yeasts, or bacteria, we are doing pretty good already. However, these fields we would more likely do ourselves because they are what we are really good at. And when we look at the parts where we are not that good at, which we are more likely to out-license, there is still some work to be done. Looking, for example, at mammalian cells or other topics. And then we have something in the middle, and that is joint ventures or spin-outs. And this can also be really, really interesting for us. And we have seen in SolarScure that this can be a really strong model for BRAIN. On the other hand, and that is really important to consider, you need to have the right team and you need to have the right application. So just spinning out for the sake of spinning something out is not worth it. You need the right team and you need the right idea. And then this can work really well. But I haven't told you the best thing yet. The best thing is that we have this decision not only once, but multiple times, many times. We can choose on our business model depending on each and every application or market we are looking at. So it will not be that we decide to do everything ourselves or to license everything out or to do just one spin out. No. It will be a scenario where we will do some spin-outs in this area, where we might be looking at licensing for other areas, and where we might decide to do some stuff ourselves. So that is, I think, a very strong message, which is at least very important to me, because it removes the problem of having one big topic to decide, but you can look at the different markets and decide where you're good and where you're not good. But now let's go to the metrics I promised you. If we have favorable exogenous and favorable endogenous factors, we are most likely to do things ourselves, or depending on the risk-reward profile, we might do a spin-out or joint venture. If the exogenous factors are unfavorable, while the endogenous factors are still favorable, we might do things ourselves as well. However, opportunistically, we might also look at spin-outs or joint ventures. If we move more to the left side, EI, unfavorable endogenous factors, we are less likely to do things ourselves. We will rather go for licensing out the technology. However, there might be some place for opportunistic joint ventures or doing some applications in-house. And I'm pretty sure you're disappointed that you don't see any categories or application names on here. I'm sorry, but for competition reasons, we cannot disclose that to you. But rest assured, the slides on my desk have categories and targets on it. But I don't want to let you go home without any information on specific categories. So I want to give you a brief overview of some categories that we have looked at. And this is, again, and as mentioned earlier, a brief overview. We do have this analysis for each and every category that you see. We have subcategories and applications where we assessed in more detail for each of the sub-applications how well the technology is suited, and we've run all the analyses that you see here for the subcategories. What you see is two highlighted categories. First, industrial biotech, which is most likely no surprise to you, because this is a category where we feel home, where we are good, and where we see a lot of potential. What you also see, however, is the field of diagnostics. Diagnostics is probably something you haven't heard us saying too much in the past, besides this day, because Michael and Paul have mentioned it earlier as well. We cannot disclose yet what our exact hypothesis on the mode of action is. However, if we, and with we, I'm mainly referring to Paul and his team, can prove that our hypothesis is true, we can probably have a significant competitive edge in the field of diagnostics, and this could be a potentially really interesting market for us. So, looking at the graph, you see, okay, 2 categories are highlighted. So what do you do with the rest? Don't you do anything there? Is that not to be commercialized? No, in the contrary. The only thing this table tells us is that these categories are less likely to be pursued by us as own developments, but they would rather be candidates to partner up with, either in a joint venture or in a license out deal. This all sounds great, doesn't it? Perfect. Why don't we go for it? Let's go for it. Yes, we should. However, we also need to consider a couple of things. Paul mentioned already that there is work to be done. This is a great success story already. However, if we want to make this an even bigger success story, we need to reach some milestones in R&D. And I thought a little bit about that, and I was wondering how projects in BRAIN have failed in the past. And thinking about that, I identified that, from my point of view, one of the single biggest reasons for projects to fail in BRAIN in the past has been that there was a lack of focus. A lack of focus in terms of resources, but also in terms of brain capacity, i.e. our people that were working on multiple projects at the same time. And this was crucial to avoid in this project. So we decided and have recently announced internally the introduction of an ambidextrous organization. An ambidextrous organization is an organization where you pull out a part of the business or part of the teams of the business outside of the organization and make it a separate organization within BRAIN. And this is what we did. We now have established a team of scientists which is only working on CRISPR. No other projects, nothing else. They're only working on BEC. And this team is accompanied with some what we call traffickers. And these are colleagues that know the technology very well as well, and that are in close contact with the core CRISPR team. And they are the bridge to BRAIN's normal business, to BRAIN's CRISPR business, to BRAIN's tailor-made solutions business. And they can help that the technology is being used within BRAIN for customer projects, we CRISPR for you, but also for internal developments. And this was a really important step because, as I said, focus is one of the most important things that we need to consider. This ambidextrous organization has some other advantages. It allows us to show you transparent cost forecasting as well as reporting. And if you have followed our earnings call last week, you will have seen that we have also already communicated our investments in CRISPR for this fiscal year, as well as a forecast for the full fiscal year. There's other advantages. Separating the structure already makes it much easier to put the whole construct in a separate company in a second step. It is also more flexible and agile, and it is a dedicated team, as mentioned earlier, that only works on CRISPR. And I'm excited that the team is just as excited as me that we have started this whole thing and that we can now work on hitting our R&D milestones. So I talked about a Nuko. Here it is. After looking at the ambidextrous organization, the next logical step is, of course, to build a Nuko. This Nuko has, beside the operational flexibility which we can already achieve with an ambidextrous organization, also has freedom in terms of a separate legal structure. The idea is the following. BRAIN puts the IP as well as important key BEC employees into the company. BRAIN Nuko is then responsible for developing the technology, for filing IP, and to commercialize the technology. And below that company, we can then have many deals. We can have joint ventures, we can have spin-outs, we can have partnerships, or we can hand out licenses. And you might recall, these are the categories we have been looking at earlier. And as I said, we can do all these things for all the different categories and all the different markets and applications we have been looking at. This company, the BRAIN Nuko, will also give back a license to BRAIN AG. This will be a license to be used for BRAIN, this is what the traffickers were for, to be used in our tailor-made solution business, in customer projects where we CRISPR for our customers. And we see this structure as very well fitted, and we think that it makes sense to establish this structure as soon as possible. So we have a lot of plans. What will it cost? And we have looked at it from different angles. And if you just ask me, what will that cost? The answer is, as so often in life and business, it depends. We have defined that to give you some guidance in two different categories. First of all, we have looked at what will it cost to develop our IP portfolio and to also create dependent IP. This will include topics like multiplexing, like mode of action studies, work on mammalians, and so on and so forth. And in the next couple of years, we expect to invest 10 to 20 million in that part of the project. If we look at developing our own products based on CRISPR, we will need a new budget for that. And this budget will then, of course, also be communicated because it heavily depends on what you want to develop. If you want to do a host strain development, this can be relatively cheap compared to a development of a new drug or leukemia treatment or whatever. And by the way, we are not intending to go into the market of leukemia treatments because we don't have that deep pockets. So we don't have that money. We all know that. So we need to look at funding options. And in general, we have two major funding options. We can be looking at funding throughout BRAIN. And this could be either equity financing, this could be debt financing, or this could be financing through a strategic partner. However, if we look at a financing through a strategic partner, we would be looking at an equity premium on the current share price. This company or this financing could then flow through BRAIN into the Nuko or the developments which might happen within BRAIN in the first place in the ambidextrous organization to finance the work and to make sure Paul and team can run well. The other option is to found a company now and get funding into the company from external parties. This would be a pretty appealing model for me as the CFO, of course, but we also have to take into account what the timing effects are. Because if we decide to do that now, we will have a significant cap on the valuation, or we will have a significant cut on the valuation, and we believe that it is our job to maximize our stakeholder value. So what we will be looking at is all these different models, and we will assess what the best way will be to finance this exciting project. So what's next? If we look at timing, we have defined two broad categories, in the next 6 to 12 months and in the next 12 to 24 months. Looking at the next 6 to 12 months, we see a couple of things. First of all, we intend to fund the Nuko and found the Nuko. We intend to start additional external co-development projects with parties. This refers to the dependent IP, which I explained to you earlier. We want to close first and additional deals on the TMS we CRISPR for you business. We want to reach additional patent filings, and we will publish our first and main IP on the technology. In the next 12 to 24 months, We are looking at closing hopefully some license deals. We are looking at evaluating first spin-outs and joint ventures. We are looking at a verification of the mode of action, an activation in mammalian cells, as well as developing the core technology into a toolkit. With this, I'm almost finishing my presentation today. But please allow me some closing remarks. If there's 3 messages you're taking home from this Capital Markets Day, please consider the following 3. First, this project has huge economic potential, and therefore we decided to devote a whole Capital Markets Day to this topic. Second, we have very broad customer interest and very strong concepts how to commercialize the technology. And last but not least, this project is not a distant dream. In the contrary, we expect to be able to generate first revenues through the WeCRISPR4U business in the very short term, and to unlock the huge potential that we have in other areas, we need to reach additional milestones in R&D. And I would really enjoy seeing you as our investors as part of this journey, because together we can edit the living for the better. Thank you.